We're here today with Simon Kleine, Europe Business Lead at Eastern Partners, and we're here to talk about a recent report put out by the firm. The report was called Financial Technology and the Corporate. So welcome, Simon. Like to tell us a little bit more about Eastern Partners?
Yes, so Eastern Partners is a business that's been going for over 30 years, and we are a specialist business banking insights analytics firm. We only do insights research analysis in the field of business banking, global coverage. What we do is we're doing just business to business, no consumer or retail. We have our own team of fieldwork interviewers who all come from a financial services background, so know the industry. And through the interviews that they are conducting for the reports we're producing, we are doing at least 75,000 interviews a year with CFOs and corporate treasurers, equivalents in other roles. So we're very much engaged literally on a daily basis with the corporate community in that way. We cover from top to bottom in terms of business revenue coverage. So from micros right through to top 100s, FTSE, Fortune, etc. And we're going across a number of the business banking product lines, from trade finance, working capital and cash management, transaction banking, business FX, payments in general, sustainable. Quite recently, we've been doing a lot of work on that. And through that work, we've now started to delve into fintech. And the report you featured about 6 weeks ago was actually the second report we've done on the impact of fintech within corporate. In terms of how we do it, as I said, we have our own fieldwork interviewers. What we describe as kind of unique, robust and rigorous bottom-up research. So it's the voice of the customer. We are talking to corporates, as I say, day in, day out. The way we get the robustness, get so rigorous, is 99% of the work we do, apart from, say, some specific bespoke client briefs, is anonymous and non-attributable. So when we interview these CFOs and corporate treasurers, it's on a basis that they have anonymity and the comments they make are not attributable to them directly. And as I say, the interviews we're doing directly. There is no self-completion. So during the course of the interview, if someone's maybe just being a bit similar in their responses in terms of how they're describing things, our interviewers will actually probe directly to ensure we've got bulletproof insights.
This is the report that we're going to be talking about, Financial Technology and the Corporate. When was the research carried out?
The report was conducted at the end of last year. We did one previously. Year on year, between those 2 years, there weren't major shifts, but it's one where there's certainly something we should be returning to in the not too distant future to see where some of the forecasts made in this have come true. Normally when we do this kind of backfilling analysis, we'll find that often what has been said will certainly be the case. And you've touched on one of the key headlines, which is 70% of the corporates we interviewed said they are using one form of fintech provider across their treasury function. The looking forward is that 3 out of 4 of those CFOs that we spoke to believe that fintech will take market share away from their incumbent providers, i.e. principally the banks, in the next 5 years. I think when you look behind this, what this really says, and also the fact the level of penetration of fintech providers already, is the appetite that exists within corporate treasury. I think it's a given to say that over the years, probably it's fair to say that corporate and commercial banking has been somewhat lacking in the investment. It hasn't seen the innovation that maybe has been seen in the consumer field. And I think when you look at it also, where most of the fintech innovation go to market stand-wise by fintech has been in the consumer field. A good example being FX money transfers has been where they've made significant inroads. Also in the space of lending with peer-to-peer lending, and also payments itself. Some of the innovation we see now with contactless and mobile payments, as well as e-commerce, as where it has been. But there hasn't been maybe the same level of impact in the corporate function. And that's where I think a frustration has come around. It's been recognized for a long time that many banks have suffered from legacy platforms in terms of their technology offering. And they're all big challenges where when you have these nimble, agile and hungry startups, they've managed to come in and nibble away at particular areas. And in those 3 areas of payments, lending and FX, that's where they've often had low entry points to come in and to do that. And in cases now, we're seeing that extending into the corporate field.
And it seems from this finding that we've flagged up on the screen that there is a lot of interest and appetite from the treasury and financial corporate community about fintechs and the possibilities that they could provide to them. I thought it was also interesting that some of the key areas according to the report, were, apart from payments and FX, which you've already mentioned, also treasury services, risk and compliance, and cash reporting.
And those stand out, and we'll be touching upon those as we kind of go through the presentation for you. I think the other bit to hear is to flag up the regional variations there are. When you look at this forecast, this prediction from corporate treasurers, it's particularly highest in China, Hong Kong, and Singapore, and the UK, where around 90% of CFOs are making this kind of forecast. It's lowest in Australia, and particularly across the report, the kind of the laggard markets where there's been the lowest level of involvement with fintech to date, the less expectation has been in the US and France. Okay, so it seems that corporates, in terms of the Australian market, corporates are very comfortable with the relationship and service they're having from their banks at the moment. They're not really looking outside of that. And likewise with France and the US. A bit of a unexpected finding in terms of the US, with Silicon Valley being so predominant in terms of being the destination for innovation and technology. In terms of fintech, with US corporates, less so. Interesting. Okay. So next question that I had was about the market trends that you see as driving, as the figure that we've already mentioned of 7 out of 10 global corporates, looking outside of their traditional banks for some of these key treasury payments and cash management services. What would you identify as some of the reasons behind that? These are the top 3 uses here: treasury functions, cross-border payments and FX, and risk and compliance. And this is where we're seeing the most impact. If you take in terms of treasury functions, that's one aspect within the range of services provided within that. That certainly has been the case where, if you look at, say, Germany, the UK and Singapore, 90% of corporates are saying one aspect of their treasury functions now is being provided by a fintech provider. Again, we see these regional variations. I mentioned France was a bit of a laggard, but in terms of risk and compliance, that's one area where we're seeing the greatest interest. And that's reflected in Germany as well. And part of that is where there are certainly a much, significantly strong regulatory regime in Europe. So that's maybe part of the driver there. Okay, and maybe here it's kind of a good point to just bring up that obviously the banks still have very much their entrenched relationships, of course, but it seems like a lot more companies are now just willing to test the waters. And exactly, I think it's been that degree of experimentation, partly driven in some ways by frustration that there hasn't been the innovation in the corporate sector. Many challenges there. I mean, we produced a report for one of our clients 4 years ago of cash visibility across Asia for corporates. And in terms of that reporting, at any one point, it would take up to 3 weeks to get a clear view of what the balance sheet was, because so much of the reporting was still based on manual inputs, albeit via Excel, if not other ledgers. So in terms of Treasury's role of actually being very clear on the balance sheet, there's challenges like that exist. And I think with that, there's been the rise of many aggregators where, I think when we did the piece of work, we found that your average multinational operating in Asia had, between 5 and 7 core banking accounts. And if they were truly global, they had another 225 corresponding bank accounts. So gathering all that financial data is in itself a challenge, and one that the banks haven't risen to. So others have come in to provide that service. Absolutely. Okay. So just moving on to the next point about some of the services mentioned in the report, which we've already really touched on. And so we're talking about cross-border payments and FX, in particular, that require a banking license. This actually came up as a comment on the article on CTMfile. Somebody said, how are fintechs getting around this problem? I think it's also down to the regulatory regime. If you take Europe, for example, it's now, 6-7 years since PSD2, the Second Payment Services Directive, came into play. One of the reforming aspects of that, depending on where you look at this from, was the liberalisation of cross-border FX payments, money transfers, and the equivalent business version. And that meant that in what were the old Euro check markets in Europe, such as Germany, France, Austria, Italy, etc., it was no longer a requirement to have a banking license to make a money transfer. And that saw significant, well, quite literally, disruption, the much favored fintech word, disruption did take place. Interestingly, it wasn't only for the banks, it was also for some of the established money transfer firms such as Western Union and MoneyGram, where many independents sprung up. And I think if you look at that in terms of, it's interesting here seeing the number one in terms of use of non-bank fintechs is Germany. And Germany was one of those markets where, depending upon your perspective, it was, probably the least innovative of markets in terms of financial services, in particular banking services. And I think that's where there's been that desire where, still now, many German firms still make a cross-border payment by contacting their local bank branch to initiate that for them, where in other cases now there's many online platforms, even some providers providing apps to make those kind of payments. So I think it shows that. I think the other one interesting one is China, where there's such a need to have that cross-border functionality. So that's driven it there. But it's one of those areas where across the financial spread, cross-border payments is one where there has been a lot of liberalization, certainly in Europe and other markets globally, to enable new entrants to come in and to enable through that innovation to thrive.
The next point was on some of the technical or service capabilities that fintechs are offering in the treasury space. How are they really differentiating themselves from the current bank offerings in, according to your report?
Yeah, another standout area really has been around the regulatory and compliance areas, now known as RegTech solutions. And I think this is one, certainly when you look at on the transaction reporting, the anti-money laundering, there's been a lot of innovation around know your customer, KYC reporting requirements. And there's been a lot of innovation there that fintechs have brought. Again, it's worth pointing out here, and it's something you alluded to, and I'll come back to it, is whilst there has been, a degree of penetration by fintechs, 70%, albeit that's, is just maybe one user experience, there is increasing collaboration with incumbent financial institutions, banks and others to provide these services. So there's a lot more complementary and collaborative elements coming through. Same with fraud prevention. That's become an area of big technology investment across particularly payment systems, where that's been the case. Conversely, though, if we move on to the next slide, this I think shows where it's not just a straightforward open playing field, and these are what are seen as the kind of the biggest barriers, the biggest kind of impediments, hurdles for fintechs to overcome. And the real standout one here is the second column from the right, the dark blue column, which is when we asked the question, what were the other issues? The biggest one that came up was counterparty risk. The real kind of having that confidence in that the counterparty is really going to come through, that they're not going to be the element that's going to let the break in the chain happen. And that's certainly something which for many corporates, they're seeing as a challenge. Around 37% of them of raising that point.
That's the main concern about using fintechs.
Yeah, it's the counterparty risk that comes with it. You can see regulation appears. Going back to the example of the impact of fintechs in terms of cross-border payments in Europe. Whilst the PSD2 liberalised on that, there's been many markets in Europe where the local regulator has been very strict in how they've then governed that. Germany and BaFin is one example where BaFin in Germany has been very diligent in its policing, auditing of the new money cross-border payment operations. So how the regulation could be then applied whilst there may be a liberalisation, depending upon that. Fintechs often haven't been so well set up because they are, by many cases, new startups to handle the kind of the regime that comes with the regulatory requirement. Regulators in many cases have then made efforts to maybe give them an environment, a playing field which to try and develop, because one of the other key drivers amongst all of this is being the desire by many regulators to see better competition in terms of banking services, and fintechs offer one route for doing that. So for example, in the United Kingdom with the Financial Conduct Authority, you've seen their so-called sandbox where a fintech startup can take their offering and go and basically play within the sandbox, within the kind of within the surround of the regulator, to make sure that the way they're proposing to operate their service meets the regulatory requirements. So there's been initiatives by that, similar initiatives in Hong Kong with the monetary authority there, and Singapore. So regulators are trying to help these new entrants overcome some of these hurdles.
And there's also a certain amount of acquisition going on as well, where banks are actually buying it.
And exactly, and that kind of comes back to that point. That's been one of the areas. And if the next slide, if we just move on to that,
yeah,
this gives you here is, again, it goes back to the level of use of fintechs by corporates. And in essence, to answer the question, should banks be concerned? They should be in many ways, because they have lagged behind in terms of their use of innovative technology in the corporate and commercial space. And this really kind of illustrates it in terms of where they've got those challenges, where fintechs are being used. So they've definitely got a challenge here. Some are embracing that, as you've said, and they're taking on some of these technologies. They're using the fintech innovation, bringing that on board. They're also fostering it through the creation of incubator and accelerator kind of hubs, where they provide a space for fintechs to have a working space to operate in, with support from the bank to actually develop these products, and the banks then looking to adopt them. I think most global banks of note have made initiatives in this. Barclays, BBVA actually made acquisitions many years ago in the fintech space, and other banks alike. There's any bank of note now has an incubator or an accelerator program operating to make sure it's trying to capture this opportunity.
The next slide.
So this, again, I think kind of shows the spread of views. And the way this rating works for your readers is we work on a basis of inverse scoring. So 1 is high, 5 is low. It makes our interviewees stop and think about what their response is. So when we're looking at this, if you look at on the left-hand group of columns, it's in China. Whilst we've seen the highest level of fintech kind of creation in China, and from the first year's report to the second, the acceleration in China in terms of its uptake, its funding, its usage has been quite dramatic. Likewise in Hong Kong and Singapore, the UK next behind. Some other markets where, certainly France and Germany, where it's somewhat lacking. When we look at the kind of the corporate sectors, manufacturing, wholesale and retail, rate high here, and also where the banks are getting involved. And I think this is a clear illustration of with both those, or with those industrial sectors, that's where there's significant, requirement for an efficient supply chain. And that, again, where fintech innovation lends itself. It's one of the areas where there's been lots of talk of the role of blockchain in terms of trade financing through trade finance supply chain, where blockchain could play a role. So again, I think many banks of note now have done their first blockchain transaction as a proof of concept. And I think it's an area where, that distributed ledger technology, where there's that kind of ledger operation and significant levels of documentation that can be seen with traditional trade finance. There's a view here that this is something where there's a role for fintech, but one that would be much more collaborative with banking in terms of the corporate requirements that exist there.
Definitely. So supply chain supply chain finance is definitely an area where there is a lot of innovation happening, and it's an area to look out for, definitely. Okay, so moving on to the last slide, I think.
Looking to the future, we asked our respondents, where they see this all playing out in the next 5 to 10 years. And this isn't just about fintechs, it's about where the areas that technology can bring around improvements in business banking. And, other areas that were explored here were, AI, artificial intelligence, the Internet of Things, all of which are on the minds of CFOs and corporate treasurers as they look at how they can most efficiently and effectively deliver their treasury function. And you get a very good feel here for the regional variations that exist. That said, the number one coming through is risk compliance with, France and Germany, and Singapore and Hong Kong, both listing that quite high. Again, maybe noteworthy, both very, very, very trade-driven markets in terms of where there's lots to be ensured to be, compliant in terms of that, in terms of know your customer, etc. You can just get a feel for here and how the corporates are looking at this, that there's certainly the opportunities. These were the top ones. treasury and cross-border payments and FX being the next. But this is where there clearly is the opportunity for further innovation. And I think one which, yes, there will be a lot more collaboration. The banks have certainly been playing catch up with that. The initiatives they've taken, which we've touched upon, such as incubation and accelerator units. But there's also, there's going to be opportunities in the FX space of where there are some significant non-bank players now in that space who are looking to do more and more.
Thank you, Simon. That's been great. Some really good insights there into some of the findings from the report.
Pleasure.